Hey everyone, it's Don, and it is November 18th at about 9 o'clock. Market's rather sleepy right now, not a whole lot going on. Little mild drift up maybe. And we're going to do the nightly video for our members. We ran a, whoop, whoop, how do you like that? Getting some feedback. Forgot I had that on. Um, we're on a little bit of a delay. We ran a specific little program on a three-line break, trading the opening range automatically. It's still on, but it only to run between the hours of 9:30 and 3:45, only to take no more than four trades, and it's pretty wrapped up, pretty tight. So we're going to do it again tomorrow. We're comfortable with what it did today. It was just one trade. We'll see how we do for the week and see how we perform in relation to the back test and the forward test that we described. If anyone has any questions about who we are, what we're about, you're welcome to visit the site. You're welcome to post any questions. And as I do the nightly video, I'll try to answer any that might crop up. If you want to see where we are, where we think we are, let's go to the Renko chart. And this is it, right? We had this huge run. This was last week. We had this little pause, and we had the rundown. And then this is the breakout area. This was drawn earlier. Former resistance becomes support, and so we expected it to stall here, and we might drift up for a day or two. But you can even tell the machine is telling us that we might want to favor the short side and that distribution is underway. So we think any kind of rally will be short-lived and probably get yet another, what we're looking for is another wedge down, and then maybe we can get down into here. That may be a tall order to do before um, Thanksgiving. We just might be in in a narrow, tight little trading range, which is fine. And we still have some nice volatility. We'll put us back here, and I can put that back up as well. Again, any questions, let us know. We hope you're having a good week. Hope you're getting it done. And what we're about is trying to trade both mechanically and robotically so that we can, whatever it is we decide to do, is that we can repeat it. We don't know necessarily what the outcome will be from day to day, but we're hoping, to keep a good, healthy profit factor on a weekly basis. And what did I just do here? Kind of messed that up. There we go. Any questions, let us know. Once again, we'll just say hi to everyone. And it is November 18th at about 9:15. You're on a little bit of a delay. We're not doing any trading tonight, although Swing Machine is monitoring the markets. It's pretty quiet. And we're running a very specific program. And we've been describing this. And the program is turning on at 9:30 in the morning on the NQ. And partly because how you doing, Michael? Michael Gonzalez. The the program, let me just give you a glimpse of what it looks like here. I think we can have it here. Let's see. Here it is here. So what this program does, it's running on the NQ. It's a three-line break chart. It's a 3-minute three-line break chart. These lines that you see here are being drawn by the machine. It's not doing anything right now. It's off. At 9:30 tomorrow morning, it will kick on. And then what it will do is it will draw the upper range and lower range over so many bars for the first part of the morning, just for, could be, it's going to be some part of the first hour, that's several bars. And then if it breaks range, it will buy. If it breaks the lower range, it will sell. So for instance, this was on Friday and this was the range, it was a big range, and she shorted right here and she made $800. Now you could have potentially stayed in it longer, but we weren't running it on Friday. But today it established a very tight range on the way back and then broke upper range and made $800. That's where it made. Now you could have also stayed longer, and then that was it. There weren't any more trades. Now it will trade as many as 4 times. Now you might be asking, um, a number of things. Where's the stop, for instance? Well, there's a number of places to put the stop. There's a profit target in here. The stop we're using is the mid-range. So if she shorted here, if it came back and hit the mid-range, she would come out. If she bought here and came back to the mid-range, she would come out automatically. But we can also program it to use the opposite range. So we could be in the trade a little bit longer, but we're not. We're staying with the mid-range. Also, you might be asking, well, how do I know how long should it measure the opening range? We want to do it sometime in the first hour, but is it just for the first, few bars, first 5 or 6 bars? Well, in order to get those types of questions answered before we start trading, with our time and our capital, what we do is we back test. And so we did a back test, which is what you're looking at over here. And we back tested for some 20 weeks. And this is what it told us. It said that if we were to run this program exactly as what the computer spelled out, we'd make 29,430, but please stay with me here, and a profit factor of 1.42, which means we'd be making $1.42 for every dollar expended. Now, there's more that we can learn from this, but the performance graph would look something like this. Now, this backtest, we don't usually show backtests because folks that are coming by that don't have a whole lot of trading experience can draw some or may make some assumptions that are not valid. So we want to be sure that we point this out. A backtest is a model. That's all it is. There is no guarantee, there is no assurance that that's what we're going to do in the future. There isn't. There isn't anything that can do that. It's a model. And it's a projection based on 20 weeks of data. So you might think of it like, a meteorologist might have a model, and they do. They have several different models when forecasting or projecting the path of a hurricane. It's just a model. But One of the things that we did over the weekend that we're sharing with everybody that we can take this a little bit further at TradeStation, and this is one of the things that we like to teach during the Q School, is when we did the back test to find out how long should we be considering the range? Where should we place the stop? Where should or how should the stop activate? Where should the profit target be? And all of that. We then took those iterations, that test, and we plugged it into something called, and let me open it. Thought it was open. Apparently I closed that. Let me go get it. It's something called the Walk Forward Optimizer from TradeStation. And the Walk Forward Optimizer is a device that they paid millions of dollars for, and I'm grateful they did. We used to do this longhand. We would create spreadsheets. And let me load this in. Okay, so let me bring this into, whoop, I'll bring this into view. Bear with me a minute. She's loading in. There it is. So is this tool. So when we created the back test, it had about 10,000 tests. Sometimes they're hundreds of thousands. And we plugged it into this tool called the Walk Forward Optimizer. And we have test criteria that we have preset. I'm not going to go into that now, but we go into it in greater detail with our members. And what it's doing is it's taking out of sample runs, 10% out of sample, 15% out of sample, 20, 25, and then making 5 runs, 10 runs, 15, 20, 25, 30 runs. What it's basically doing, it's trying to randomize the backtest data, randomize that data, scramble it. Now, we used to do this longhand, Susan and I, back years ago before we had this tool, by creating multiple spreadsheets and then going into a chart over and over again and changing the time frame from the last 3 months to 3 months, 6 months ago to 3 months, 9 months ago, that sort of thing, going back in time and scrambling it. And what we're trying to do is test the veracity or the robustness of what we're about to do. It was very time consuming, very tedious, still time consuming, but not as much. What I'm interested in is not so much the individual. And by the way, when it says failed, it doesn't, you wouldn't throw it out with the bathwater. They could all fail. They will fail if any one of the 5 criteria set up fail. We use all 5. You may only have, there's really 2 or 3. I should really probably reduce it just to 3. There's 3 things that I'm most interested in. One of the things I'm interested in is the matrix average, though. The average of the entire matrix, which is a pass. So that's good. Tells me that this strategy is robust. Now I can go in and look at the annualized profits. And it's telling me the matrix average is telling us that, yep, this is a pretty good back test. And you get a pretty good shot on an annualized basis of making $48,000 a year trading this. But there's no guarantee. You might do more. I might do more. I might do less. But that's what it's telling us. But there's another criteria, and this is called the efficiency. Now, the efficiency, the matrix average is 30%. Now, the way we use that is it tells us that, yes, the back test is telling you 30,000, but the matrix average is telling us that the efficiency of that back test is at about 30%. So we may not make 30,000. We only may make 10. But then again, we might, right? There's no guarantees. And a couple of nice trades that you stay in, you use a little something else, your own flight skills, your own driving skills, you stay in a few trades a little bit longer, maybe you do better. But that's what it's telling us. So I like to know that. I like to know the annualized. I like to know the efficiency. And then this one I really like to know. Because this one's going to tell me whether I'm going to have a hard time or an easier time. And that's the consistency of profits, the percent of the runs that are profitable. The average, 71%. So it's highly profitable, which is going to be nice. I should know in a fairly short period of time, like a week, how this is going to run for us. So we shall see. Just one day, one trade, that's all we had, and we're going to turn it on again. So I wanted to give you an idea what you're up against. um, when we're trading and when our members are trading, they're not winging it, and they're working very, very hard, very diligently, very patiently, and to become more and more mechanical and more robotic. And that's what we're doing. So there won't be any more trades tonight here off of this strategy, but Swing Machine is doing it here, and we can slide you back to the intraday swing machine, and you can see some of these trades that went off. If you're looking at the 1 minute, 44 minutes ago, you would have had a trade on the ES, you'd be up 187, 43 minutes, 444, 125, 49 minutes ago on gold, 270, 52 minutes ago on oil. What does this run on? This all runs, that's a great question. These programs are all proprietary, designed by us, and they only run on TradeStation. And the reason why we're just a happy customer of TradeStation. The reason why we use TradeStation is they have this unique tool called Radar Screen, which is phenomenal. They're the only ones that have it. And then they have great other tools, great platform, and they have their own easy language where we can do our own original coding. This does not use moving averages, stochastics, and MACDs, and we've been doing this, Susan and I, since the early 2000s. I'm not from Wall Street. I'm not from Madison Avenue. Susan worked for IBM and Lotus Software in the early days, and I work teaching surgeons how to do surgery. So we're pretty far removed from Wall Street, but we approach our trading with surgical precision. We want to, fly a plane without crashing it, every other day. We have zero tolerance for negative outliers. We will have losing trades. You will have losing trades. But we don't want a negative outliers crashing the plane. That's not going to work. And we don't. We have zero tolerance for it. And we can say that because we use machinery. Now, if you choose to learn to use the machinery and then don't use it, you can drive a car without a seatbelt or airbags, I suppose, or you can, drive it recklessly at 100, 150 miles an hour when, you don't have to go that fast. So, but it only works on TradeStation. So if you're in another part of the world, you do want to find out, if you have any interest, you can certainly visit our website. And but one of the questions you would want to know is, does your country afford you the opportunity to use the same version of TradeStation that we have in the States? Unfortunately, not every country does. And unfortunately, we're all learning to a certain extent. We all may not be as free as we think we are. And not all companies will enable or empower you to do this sort of trading. And some countries won't enable you to do it either, which is a shame. Thanks for the question, though, Michael. We're not presenting these tools or these programs as um, I'll answer that question. I think we're not presenting these tools as a holy grail. The holy grail is you. Um, you still have to have good acquired trading skill. I trade a lot of prop firms. Would it work with that? Um, I don't use prop firms, but I have just been discussing it of late because we have a number of members that do. I don't see why it wouldn't, right? I don't know a lot. I'm getting probably more and more educated by folks. We're in a good place. I don't need their capital, so I've chosen not to use it and have any of their rules. We have our own rules, but we do have members that have TradeStation, have not just TradeStation, but have other platforms like Ninja, and then also trade their own capital and or have a prop firm account, or I guess what is called a prop firm. And and I don't know why you couldn't do that. Now, one of the things that we can do from TradeStation though is we can automate it, right? But I believe, not 100% on this, I believe you'd have to search it out, that some of the prop firms or some of the other accounts will accept signals from TradeStation and and could, take it in. Now, what is the latency on that, and how much of a delay is there, that sort, and how that works? I don't know. I don't know. But you might pursue that. Thanks. Hi, Knick-Knack. Knick-Knack, Paddywhack. Um, yeah, well, that's good that you have TradeStation. That's if a person's going to be a monthly member to us, you don't have to have TradeStation. If you have desires to be an annual member and get all of our tools, including the tool that you're looking at here, plus we have close to 65 to 70 of them. Um, yeah, I believe I've been told that it does. Um, Michael. I have been told that it does, but I don't know. I can't confirm that. I don't know the latency. I don't know how that would work out, but I am told that it does, and that would be a good thing. Now I don't have a Ninja account. Maybe I should, but I don't. But I have other accounts, and we'll take all of our signals from TradeStation, but mostly trading futures at TradeStation, and the other accounts are handling some of our option work for the most part. And Knick-Knack, if you want to go back, we just described a little bit of what we were doing here, so I'm not going to repeat it all. But if you go back about maybe just 10 or 15 minutes in this video, you can scroll back and, at a later date and hear a little bit if you would like. Like I say, we've been doing this a long time. We haven't been doing this for like 6 months, 6 years. We've been doing this since the early 2000s. And Stock Market Caddy was not our intent, right? We started out just to take control over this part of our life. When I say we, it's Susan and I, and and that's what we did. And then Stock Market Caddy came about in 2011, 2012, just simply because I was bored to tears. The way that we trade is very boring, very, very boring. It's very mechanical. It's very robotic. It's just, going to, that's good, and we're just trying to get our share. We're routinely leaving plenty of money in the market on the table, and that's when you know you're hopefully trading well. The the tool that you're looking at, Knick-Knack, this tool is TradeStation's radar screen, but we have written programs to operate that are proprietary to us on that radar screen. So we can change this. This is actually giving us buy and sell signals on any interval, and we can change the interval. We can change it down to a tick level. We can trade the 1 minute in the direction of the five. We can trade multiple time frames, multiple markets. We can do we can trade with the trend. We can also trade counter trend. We can also trade options. So let me just show you a little bit of a glimpse. This is another radar that we call the options club selector. It's got a different color. In this option, let me bring this down here. The SMC, Stock Market Caddy options, defined risk options, club selector or trade selector. And we can come in here and then this will give us and give our members, we like to get them at the end of the day. These are the stocks that represent the best directionally long options for the next few days. And there they are. And it'll actually tell us whether or not we should be a put credit spread, buying a call, or a debit spread. Now, where on the delta you place them would be up to you. We can also get them over here on the short side. It'll tell us they'll also happen to be puts. Now, we actually had a ton of them on the short side, and they all came in. Last week was a huge week for all of us. We can also get iron condors. These stocks here represent the best iron condors tonight. But again, as an option trader, you have some discretion as to where you place them. And there's still a skill set. But this is going to do all the math. The mistake that we think that people make when it comes to options is they go to a chart first. Well, that's good, Nick. We are too. Yeah, we're trading futures intraday, and then as we go out 25 to 45 days, we trade options. Occasionally we do some 5 or 10 days, but normally it's 25 to 35. And let's see, here we can get the expected move. We can do a whole host of things here. This tool here, this is also for stocks. This is a trade generator for Pebble Beach, and this generator is actually reading candles. It is deadly. The purse doesn't seem like much, but it's just a $10,000. All of these signals were today. And you take out the label row, there were 18 signals, and we're profitable in 17 of the 18. Not unusual at all. Very, very accurate. And you can use this with futures, and you can drop the signal as, down to, 15 minutes if you want to. Gives you the entry price, calculates the purse, and also gives you a stop. And if you are trading range bars or price bars, this dynamic, we call the dynamic range calculator, this gives us the brick size that we should be using if we're trading intraday or if we're trying to mimic daily or investor size. As an example, we don't really use moving averages, but we do track them so that we can keep it. Here's all the S&P 500, and we can just sort here those stocks that are over their 5-day EMA. Which ones are pulling the market higher and or pulling them down. And then we have a unique way of calculating the breadth of the market, looking at the moving average. This is the only tool that we use for moving averages. Otherwise, we don't. And we can also use, well, we use traditional charts as well, but when it comes to options, we think the mistake that people make is going to a chart first and not doing the math. We go to the math, the options configuration, and then look at a chart. Please go 3 or 4 videos ago. We have a person that went through our Q school. Last week was his first solo week, and we made a video of his scorecard. He traded Wednesday and Thursday of last week. His name is Scott. You can go and look at it. I'll let you see what he did. Pretty remarkable. The Renko chart, and this is on the S&P. These are C points. This is all being drawn. I didn't print this in. The machine printed it in. Machine's printing this in. The brick value is being printed in, but these C points are being printed. Each one of these bricks is $1,000. If you were playing for just one brick, this will get drawn right here at the open. So there's 1,000, there's 1,000, there's 1,000. Every one of these you could have picked off at least one. It'd be like playing golf with a 9-iron. I mean, you'd be leaving a lot on the table, but it's very, very accurate. Very accurate. We come back here to the intraday. We can change the ES as an example to a 60-minute. So it went, sorry, here, this is on I didn't mean to change this one, but I did. I changed this one to a 60-minute, and this went short 58 hours ago. You'd be up 4 grand. It's ripping against the short, but it's still short on the hour. Put this back to a 3-minute. If we can also put it on a daily chart, and here on a daily, this went long 50 days ago at 56:21 at 5 p.m. back, not on the election, but on September 11th. If you had taken that trade and you're still in that trade, you'd be up on with a futures contract, you'd be up 15 grand. If you had done it with a option, you would have also done very well. And I'm happy to plug in. This isn't a carnival game. You want me to plug in any of your markets, you let me know what it is, and I'll plug it in. Here's the NQ on a daily, 46 days ago. 46, they're usually within a day or two of each other. There's 19,000. And you saw the crypto. This is Bitcoin. Now, Bitcoin is a huge contract. It's huge. It's 5 coins. So it was 28 days ago. Swing Machine went long crypto at 63,930 on October 11th. And this is, a big futures contract. There's 5 coins in there, and that's how much you'd be up. But a 43% return. Ethereum went long 9 days ago and has generated 8%. We can do this with, again, we can do this with stocks, and to give you an idea on the hedging, let me just put in something here. I'm going to put in the dollar. It's going to be on a delayed contract, but we're going to just look at it on a daily. Let me just punch this up on a daily, and then I'm going to put in the euro at EC as an example, and I'm going to put the euro on a daily. Oops, not a weekly, a daily. So we match it up. I'm just plugging them in. So here the dollar 32 days ago goes long at 102.30 cash, right? A dollar contract. It's like what, 2,000 something dollars in margin. The euro had gone short the day before. This must have been a weekend. So it was a trading session before, 33 days, which is about what, about $3,500, $4,000. So you're roughly about $5,000 or $6,000 in margin, overnight margin, and you're up well over 100%. This is a great tool. Swing Machine is a great tool for hedging. We're going to put this back though to the ES. No, excuse me, the NQ. NQZ24. And we'll put this back in QZ24. We'll just change the interval. And you can change the interval to, we have folks that think that time distorts and they like to use ticks, and you can certainly do that. And we're going to just put this back to 135 though. So we got to get busy making the nightly video. Thanks for stopping by. We're going to let you watch probably right up until about 11:30 at midnight or so, thereabouts. That's all explained on the website, Michael. Um, so I won't take the time here, but if you go to the website, and if you still got questions there, you yeah, feel free. You're welcome. You're welcome. Yeah, v visit the website, take your time. We got basically two levels of membership for the swing trader going overnight. And if you still got questions, you can email us. And then any day, 9 a.m. to 9 p.m., if you want to call, you're welcome to call, and I'm happy to chat with you. The way the pricing is structured, if you think it through once you've had a chance to hear it, we're trying to give people an opportunity to see what this is about, how we approach it, and then giving them an opportunity to say no, right? So we're not going to slam you with a bunch of, you know, you know, this isn't for everybody. Trading isn't for everybody. So um, we just don't. We're small and We're growing. Um, about as fast as we can grow. Actually, we have a limited number of licenses we issue each year, and so we're not out to, be something that we're not. Is this a day trader program? Um, well, we're active traders, right? So we're we have over close to 65 to 70 programs, radar screens, show me studies, proprietary indicators that run the gamut for time charts, point and figure, Renko, classic Renko, custom Renko, and and then also trading robots. These programs are fractal, so you can run them intraday, or you can run them, from day to day, or you can run them weekly or monthly if you wanted to. Just that as you go further out in time, at least what we do, we reduce our risk. We don't use the further out we go, we use less and less to no leverage, and we use a responsible amount of leverage intraday. Responsible. We're not trying to, we're not going crazy. It's a responsible, and that's also what we teach. The biggest mistake that new young traders make is either being undercapitalized, not having enough money, or having enough money but over leveraging, overplaying their hand, trying to do it all in one day, 1 week. And that's the mistake they make, one of the big ones. Again, if you go to our YouTube video and look for Scott's scorecard, about three, four, five, within the last 3 to 4 videos that we've made, what type of year returns are normal? Um, that's a great question. And let me ask you a question. Um, how do you keep score, Michael? Now you're going to be on a little bit of a delay, but how do you keep score? I have a cat purring in my face. It's not my stomach growling. She's a money cat too. She's a calico. Gross profits. That's how you keep score. What about the gross losses? Okay. All right. So let me I didn't expect to do this, but let me share with you how we review this. Um, there are normally um I always kind of joke about this. Like if I go to play, I usually play golf with the same folks, but let's say I go to the tee and I'm not with the same group and I get a guy that comes up and after a couple holes he wants to tell me about no, 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 you're not at all. No, I like the questions. That's why we do this actually, to answer questions and if your questions, other folks have it. So, but this guy on the golf course, he's going to tell me about the boutique broker he's got, right? And he's going to tell me that this boutique broker gets him 10% a year, every year, 10% a year. And he's a boutique broker. And he's giving me the impression, that if I play my cards right during this golf round, he might he might slip me his contact, a reference, right? But I'm not going to say anything, right? I don't, by the way, when I play golf, I play golf. I don't discuss markets other than here. I don't discuss it out in public. Um, because most people don't understand. And I certainly don't discuss it out on the golf course. But most people like to, right? So I'll just listen. I'm not rude. But the thing that I'll be thinking about is a 10% return. We always hear is a great thing, right? Although the markets have returned 10, 20%, it seems like for the last 10 years, right? Um, the problem with that is, though, that might be good for Warren Buffett, who's got billions and billions of dollars. But a 10% return, when I hear that, it sounds decent enough. But on what? On $10,000, on $100,000, on $1 million. Okay, it's $1 million, 10% return. Okay, I mean it's a nice return, right? If that's, but but you don't know on what, and is it compounded from one year to the next? So the 10% really, the percentage return doesn't really tell me anything. And then you've got the guy who, the hockey captain up in Connecticut, and he says, "Hey, if you subscribe to my service." You're going to win 90% of the time. This is the win-loss ratio. Win-loss. And that usually catches a lot of people because, man, if you're winning 90% of the time, I mean, you're obligated to win, right? You're obligated to make money. No, you're not. Why not? Well, you can have 9 wins in a row of $1,000, thousand, 1,000, 1,000, and then on the 10th trade, lose 20,000. Where are you? So you can have a 90% win-loss ratio, but you can still not, it still doesn't guarantee that you're going to make money. In fact, most retail traders and all of the prop firms bet on this, that they're going to eat like a bird and shit like an elephant, especially if it's not their money. That's the only somewhat of an issue I have with the prop firms is that they might, I'm reserving judgment because I don't know, but they might be encouraging some reckless risk taking that you may not take with your own bread. But the win-loss ratio isn't important. So how do we keep score? How do we do it? If you are keeping score just on the money, then you're keeping score using greed and fear. So what we do is this. We take the gross profit and we divide it by the gross loss. And this keeps everybody honest. And if you go back and look at Scott's scorecard, you're going to see it. And that's going to generate a number. And it's the profit factor. Profit factor. So if in the first week you have gross profits of 10K and you have a loss of 5K, your net is 5K, right? But your profit factor is 2. 10K divided by 5K, 2. Means you're making $2 for every dollar you put at risk. That's what this number is, 1.42. The next week, you might only gross 1K. And you might have gross loss of 200 bucks. Now, your net is $800 in the second week, but your profit factor is what? 1,000 divided by 200 is 5. Which week did you trade better? This week. You only made $800, but you traded much, much better the second week than you did on this week when you netted 5,000. It keeps us grounded. And it also keeps us from chasing the money, which is what prop firms want you focused on is the money. So if we got to work to get away from that, we're tracking profit factor day in, day out, week in, week out. And if you've been trading for any length of time, few months, few years, and you're not tracking your profit factor and you're just keeping track of the money, then the problem with that is you're trading greed and fear. You may not admit it, you may not recognize it, but you are. And the other part is you really don't know what to work on, and you don't know for sure what's really working. Because like I say, if it's just the money, you could have an exceptional week on the money, but the trading was narrow. So it's like keeping score on golf. You can shoot an 85, but not all 85s are the same. Trust me. So you want to know someone who's really serious about their game. They're going to know how many fairways did they hit, how many greens did they hit, that type of data. Why? So then they know what's working, what isn't working, what aspect of their game they got to improve. Not only what you're doing, but also what is the machine doing? So if you have a trading robot, we have dozens and dozens of robots, but I'm not going to tell you exactly what to run. I'll tell you what we're running. I'll tell you what the settings are. But you have to have the skill set to choose them and to run them and collect the data and learn how to track it. It's your money, it's your time. And it's kind of like being the coach of your own team. And there's a skill set there that has to be learned and acquired. But a big part of what we do, so when I ask you about how to keep score, you say gross profit. That's half of the equation, but you also got to get the gross loss and you got to get on that profit factor. Because that'll tell you. And what we're doing is from a profit factor below 1, you're losing money and you're going to keep losing. A profit factor of 1 to 2, you're putting shingles on a roof. You're working really hard. You're profitable, but you're working really, really hard. 2 to 3, we think is average. Over 3, you become a money-making machine. Now, there is an asterisk to this. If I have, so if I'm trading where I'm making a decision to put the trade in and take it out based on, mechanics, I'm flying the plane. I'd like to have a profit factor of over 3, 4, 5, as high as I can get it, but I'd like it to be over that because I want to feel good about what I'm doing. But if I get the machine, if the machine is flying the plane, if the machine is trading and it has a profit factor of 1.42, I'm okay with that because it's a machine. I'm not doing it. I could be tweaking it. I could be taking a little profit here, but for the most part, the machine is doing it. It's flying the plane. And so when I'm flying it, I don't want to, I don't even want to make that many decisions. I only want a few trades. So, um, any case, something to think about. Go back and look 3, 4, 5 videos ago for Scott's um, scorecard. This is a gentleman went through our Q school for 3 weeks, and then last week was his first week solo. And he traded just Wednesday and Thursday, and he took Friday off because that's also what we teach, quit early. That's something you can do here that you can't do in a casino. And look at look what he did. So the other part is that's why we're reluctant to show back tests, and I don't make any suggestion that anybody and everybody should do this. I don't make any claims that if you do this that you're going to make money. I can't because I don't know. What I do know is after you go through something like the Q school, which is pretty intense, you're going to have a really good idea. You're going to have a really good idea, and I'm going to have a really good idea. But in the end, it's going to be you. The reason why we don't make any claims is I'm not giving out specific buys and sells. I'm not managing your money. I'm not running a hedge fund or a mutual fund. I'm not doing any of that. We're a mentorship for those folks who want to learn to trade mechanically and robotically. It's a mentorship. It is not an apprenticeship. You won't be, our members can reach out to me at any time, but they're learning to trade their game and over time they're getting more and more, hopefully more and more independent in doing their thing. So it isn't an apprenticeship. It isn't come into a trading room, even though we have a live Zoom every day and have, high-fiving each other and making a lot of noise and, doing that sort of thing. We don't do that. But they know where to reach me. But they're making decisions, you know, what do they see for the market tomorrow? Where are we? What am I going to run? Am I going to run, what am I going to run? What am I going to do? Right? So I hope that's helpful. I've got to get to work. I'll let you watch up until, like I say, up until about 11:30 at midnight or so. You're welcome to watch. When you look at these trades here, um, this is, if you had traded the ES 82 minutes ago at 8:44, yes, you'd be up $400. If you took the 5 minute at 8:55, 275. 81 minutes, 735. 14 5 minute segments ago, 395. That's what it's showing. The big one for tonight is actually today was long gold, the 5 minute at 355. You'd be up 1300 as an example. Now there's a technique to trading this. I wouldn't suggest you try to trade this on YouTube. It's on delay. You haven't been in serviced on how to do this. And this is one of the first things that we teach for the first 1 to 2 days. And then this is central to what we do. We keep our eyes on this, but yep, yeah, we'll punch up live tomorrow. Yep, at some point. I don't know what time, probably middle part of the day. Yep, yep. And sure. Just push the notification button, Michael, and when we punch up, you'll get a notification. Yeah, we try to punch up middle part of the day. It's not every day, but we try. All right. Good night, everybody. I got to get to work. Happening live. We're happy to, plug anything in, and especially that we already have TraceStation, right? Um, and TraceStation's phenomenal. Sorry about that. Zoom kind of timed out on us there, and I lost the some of the editing that we'll do. We kind of dress up the screen a little, but we'll still let you watch. And like I say, up until about 11:30 or so. In the evening hours like this, normally during the normal session hours, we're trying to trade the 1 minute in the direction of the five. But in the evening hours where things are a little bit thin, a little bit slower, just coming in and trading the 1 minute can be a fine way to go. And and if we have a member that's been doing that, you could either be doing it mechanically by hand, or the machine could be putting us in. And this 1 minute went long 102 1 minute segments ago, or at 8:44. You'd be up 612. Notice 101 minutes ago, virtually the same time, 11:30, 103 minutes ago, same time, four and a quarter. The Russell was 56 minutes ago, 195. Gold, 107, 890. Oil, as an example. And we trade, let's see if we can, well, I tell you, I won't change it. Well, let's see if I can. Yeah, no, it's gonna mess with me. Um, yeah, it's gonna, I won't mess with it. I was gonna try to change the Bitcoin to an hourly, but we're not really trading Bitcoin a whole lot. This would be a great tool though if you do own Bitcoin, and you want to hodl it, that'd be fine. But I would, when it pulls back, I would definitely come into the futures market and short and hedge your stack of Bitcoins. Okay, so we're compressing the nightly video that's going out to all of our members. So we have monthly members. I have a little more time. I can explain to the folks that are here how we structure our membership. It is explained on the website, but it's pretty simple. We have a month to month. It's $100 a month, and you get a video every night of all of our algos, looking at futures, looking at stocks, looking at options, and there are dozens and dozens of opportunities, trading opportunities every night. And for the monthly member, might be working another job, is looking to affect some trades, they're going to get consistent and objective trade opportunities every night. And it's month to month. We don't run specials, join for 10 years and get a special. We don't do that sort of thing, right? We just don't. We don't continue to give you value. You won't stay. But our retention for our monthly members is very, very high, like in the 90% range. It's very, very high. We have, for the person that wants to be trading as a business, trading their own money as a business, trading intraday, because I'm here every day. I want to be, right? I'm here every day, here every evening. Um, this is my thing, and I love it. Um, you don't have to be here every day, but if you want to be trading as a business and trading during the day, we call intraday, then the membership that you'd be interested in, everyone needs to be a monthly, but is what we call an annual membership. In an annual membership, you get everything that we have. You get all of our tools, everything. But you do have to go through one step once, and that's what we call the Q School before you join. Think of it as a trial, think of it as an interim step, and it's for 3 weeks. We want to spend 1 to 2 hours with you, ideally, ideally every day. And we're gonna, if you have TradeStation, which we hope you do, you'll get the most out of it. We're gonna start sending you programs. And we have a dedicated Zoom feed. Gonna be speaking with you every day, and we're gonna start peeling this onion back, and you're gonna start working with the programs. At the end of the 3+ weeks, you're gonna have a really good idea what you want to do. Now, we hope and we're confident, but we hope that you're gonna become an annual member. If you do, we're going to give you 30% back for what you paid on the Q School. If you don't, we'll part ways. We'll be friends, I hope, and you will have learned a lot and you're going to still do very well. But if you become an annual member, you get a 30% credit back on what you spent for the Q School. And then there's an annual membership. And then you get all the programs. We send them to you. And you have them, they're encrypted. You will have worked with many of them, not all of them, but many of them, and you'll have them for the use of a year. After a year, if you rejoin, the cost goes down, and you get 1 month free for the first year you're with us and 1 month free for your forward year, up to 5 years, which in essence gets you 6 months, an extra 6 months. In essence, you're cutting the cost in half. So we have annual members. Their effective cost is $1,750, $3,500 a year, cut in half because they've been with us. But it works because they're extremely independent and they're off and running. So we at minimum we hold your pricing the same, but we're actually trying to reduce your cost and also create more value by creating more content, more opportunities, more tools to trade. And it works out. Been a very successful model for us, and that's what we do. And we do little to no advertising. It's just word of mouth, and it's great. It seems to work. So if that interests you or resonates with you, look at the website, think it through, and we're happy to chat with you. If you're going to do the Q School, though, that calls for scheduling. It's first come, first serve. So we should, at minimum, speak over the phone, make sure it's a good match, make sure it's something that you want to do. It's what you think it's going to be, and make sure that we're on the same page. So that's it in a nutshell. But again, we're going to let you watch. I'm sorry we lost our Zoom markings, and I'm a little too lazy to dress it up. So you're seeing the screen for exactly the way that I'd be seeing it as well. The program that we ran today, it's only running. It kicks on at 9:30 and then has its parameters. It's what we call the opening T-ball strategy. It's trading the opening range. And so it's not going to kick on until 9:30 tomorrow. We'll try to punch it up maybe as it gets underway. And Swing Machine, of course, will be doing its thing. But we're doing something very, very specific. This opening range, we've had it for some time, and I've never run it on what we call a three-line break chart. It's amazing. We've run it on everything, on all kinds of things. I've never run it on that. And the back test and the forward test that we showed looks really, really interesting, really promising. And so that's what we're looking at. So any questions, you'll feel free to let us know. The back test, this is the back test on the strategy. This is about 20 weeks of data. Actually, this is that is not right. No, it's not align. I don't know why that says align. That isn't. It's actually on the NQ. Let me make sure about that. Let me refresh that and go here. I don't know why it says align. I know I clicked on align, but this is actually a performance report for um, this strategy. So the 20 weeks, I'll just again share with folks what this did for us. We ran a back test for 20 weeks, came out with a very nice result, 1.42 profit factor, fine for a machine. The performance graph looks like this, right? So now please understand that is a back test that may or may not perform in the future. We know that. So what we did was we took the data from here, about 10,000 tests, and we plugged it in to this. And this is TradeStation's walk forward analysis. They paid millions of dollars for this tool. And we have test criteria set up. And what it does, it takes the back test, some 10,000 tests, and it randomizes the data. It takes the 10% out of sample, 15, 20, 25, 30% out of sample, and then has these runs. This is the down and dirty explanation, right? I don't have time tonight, but this is the sort of thing that we delve into. What I'm interested in is the matrix average, which is a pass. That's good. But I can drill down. I can look at the annualized. So it's telling us, the walk forward test is telling us that if we run this, we could make 48 grand. We could. Operative word could. We may not. We may make more, we may make less, but that's what it's suggesting. But we're not done. It's got another category that I value called the walk forward efficiency. And once again, I'm coming in and I'm looking for the matrix average, all of the runs. It says 30%. What's that? Well, what that means is the way that we interpret this is if the back test shows, let's round that off to 30,000, and the efficiency is 30%, the walk forward and analyze is telling us, you know something? You're not likely to do 30,000, Don. You're likely to do 30% of that, which will be 10,000. Okay, maybe that's acceptable. Maybe it isn't. Maybe we do better. Maybe we don't, but it's interesting. So that's what it tells us. Gives us something to shoot for. It gives us something to measure our performance against rather than just winging it and guessing. Now let's look at the consistency of profits. Now I do value this one. And what this one is telling us is the consistency, the percent of the runs that are profitable, 71%. That I like. That tells me that I'm going to know in short order. And today we just had one trade and it was profitable. But I'm going to know by Friday, I'm going to have probably a really good idea this week of what the probability map is going to look like for this strategy. Now, I didn't test it all out. I just did a 3-minute line break. I could have tested it with a 1 minute, a 5 minute. I could have done a whole number of things differently. But what I will do is at the end of the week, we've already videotaped the testing that we did on Sunday, and we're going to compile that video. We're going to compile the performance, and we're going to compile what we do, and then we're going to share it with our members. Now, some will use it, some may not, right? That's fine. But we will do that. We'll do it so they can have a couple of things. One, they can learn from the example, and two, maybe they use it, and maybe they do something else with it. We can also, this backtest is, or not backtest, this walk forward is extremely um, powerful. For instance, we can come here to the distribution analysis and we can see how many bars does it usually take for us to be profitable. Usually it's 1 to 5. The longer we hold it, the worse we do. So that's kind of interesting. So it's pays out fairly quickly. We can also look at the entry date. Now we ran today and we were profitable, but Mondays, it's usually not profitable. That's what it's telling us. Tuesday's profitable, the best day. Wednesday, Thursday, not so much. Fridays, it is. It's also telling us the entry time, 10 a.m., 11 a.m., not so good around noon, good at 1, not good at 2. And then as the afternoon wears on, not so good. And that makes sense because we're trading the opening range. It's usually going to be in the morning, just as it was today. We make our break. The thing is, the tool establishes the opening range and then trades it, and we're done. This is the sort of information that we can glean. They are models, and we're looking to grade our performance against them and help us set our expectations, as opposed to maybe you hear about, oh, I don't know, somebody online says, if you trade the 2 weighted moving average against the 8 exponential moving average and then do this and do that and do this and do that and do this and do that and that and this, then it'll work. And you do it for 3 or 4 times or 5 times, and maybe it does work, and then it don't work. And then it does work, and then it don't work. The problem is you don't have any degree of expectation. And when you don't know what to expect of something, what are you going to have? Anxiety, stress. Not good. We don't want stress. This is really quiet. I don't have a TV in my office. Listen to music, I read, and it's rather meditative. Talk to you guys, answer your questions, give you a glimpse at all hours of the day and night. Our annual members, by the way, they have their own private Zooms. So our Zoom goes up for them on Sunday at just before 6, and it's up all week until 4:15, 24 hours a day. But not all of them avail themselves of it because they have everything that I have. So but if they need to reach me, they know where I am. I'm going to be nearby. Or they can call or email or text but that's, we're usually here. When you're in Q School, we have Zooms that are dedicated to you. So it's one-on-one. It's not me and 30 other people. It's me and you and me. And we want to give you that time in a live environment to see what's taking place, see what's going on, and be able to talk with you and give you a chance every single day. There is a curriculum of sorts, but to give you a chance to ask questions. And it just takes time. The idea is to lay out what we try to describe as like a buffet table of options. Because if you go to somebody or you learn something and that's all you only learn one thing, and then that one thing works for a while and then it doesn't work because the market changes, and then you're like, now what? And then you learn one other thing and one other thing, and it destroys your confidence. We would rather, let's take the time up front, let's lay out as much of this as we can so that you know in advance what's on the buffet table and you get to choose. And you can, maybe not from day to day, but from week to week or month to month, maybe you want to do a little of this, a little of that. And you're to that extent, you're maybe like a coach, and it's not just quarterback sneak, quarterback sneak, quarterback sneak day after day after day. There's nothing wrong with that if that's getting it done for you, but maybe you want to throw a few passes over the middle or do something else. At least you know, and you can problem solve. You have the skill set to begin to problem solve, hopefully, right? Our members, all kinds of backgrounds, all kinds, all over the world. They're very disciplined. They're very patient. They're very serious about what they're doing. It's thematic around golf, but we're very serious about what we're doing. We're not spending this much time, just to waste. Most valuable commodity of all is time itself. We can't buy it. We can't make it. We don't want to waste it. And if we chat on the phone and we don't think we can help you, I'm going to tell you. There's been a few instances of that, but usually that's not the case. But again, I don't want to waste your time, nor mine. Mhm. Makes sense? I hope so. All right, so we're going to put you back to the intra evening, and we can see what's going on here. Now we can and we do use charts, right? So we use all kinds of charts, point and figure, time charts, tick charts, Renko, classic, custom Renko. By the way, the CME, I need to send this out to our members. If you haven't registered to the CME, it's free. You should. Um, in December, they're going to have a contest. It's going to be for a week. Now you got to trade on their platform, and we can't automate, which is unfortunate, but we will enter under Stock Market Caddy. We've done pretty well. The first time they did this, there were 1,400 traders. And on the last day, it was from Sunday through Friday. And on the last day, we got to number 10 and we got as close to seven. And then we finished 20 out of 1,400. The next one, um, I think we got as close to 50. The only top three won prizes, and so we didn't stay up on the last day, because I couldn't get into any of the money. And then the third one, which was the last one, I think it was, I haven't lost track. They've only done it a few times. There were 2,400 traders. I think if I have the number right, 2,400. And on the last day, we got into the top 10. And during the night, we stayed up overnight. We were number two. And we ended up finishing number seven. I think we're competing against teams of people, and it was just me. Susan wasn't staying up for it. I was pretty tired, but we're going to enter it again, and we are trying to win it. It is real in terms of the rules. Everyone's got to play by the same rules, but you can do whatever you're accustomed to doing. Can't be rigged. It's through their platform. It's a little clunky. It's like 2 or 3 steps to get an order in, so I can't automate it, which is cumbersome. Um, what was I going to say? The only thing I don't like about it is, though, it encourages, maybe, I'm not sure if the prop firms encourage this, but this challenge to us, and that is they only give prize money to the top three, and they're grading it on the money. So what does that encourage? Huge risk, maximum risk taking. And we don't do that day in and day out. I don't have to beat you. I don't have to beat anybody. I just got to get in and get my money out of the, extract cash flow out of the money flow and be done. But in order to, get bragging rights and to win the CME challenge, you've got to, you got to have to come in and, use your maximum leverage with them. And they're very, very good. I mean, the people that are getting the top few, are very, very good. I'm not taking anything away. You can, someone can come in at the beginning of the week and maybe, punch up for a day or two, and then usually they're gone. But, to be there at the end of the week with, that many people and to be in the top, you know, well, we've been in the top um, top 1%, um, 2 out of 3 times. And I think the last one was, what percent was that? Like in the top 4 or 5%. So we're going to do it again. It's, I guess, long story short, if you go to the CME, you can register for it. It's free. You got to take a little test. They want you to a little knowledge test, which probably doesn't hurt. It's pretty simple. And it's going to be the first week of December, and and we'll keep you posted on how we do, and our members get to watch us do it. Now, I will share with you something that we shared with our members tonight, for those that are here. Um, we have a situation where we have a product that we call the Nicholas timing model, and it looks it's very, very good. It's a a daily signal, and it it looks at the data stream of the four markets being the S&P, the Nasdaq, the Dow, and the Russell individually, but it also looks at the data stream of the VIX and the data stream of the 10-year Treasury. So all three data streams flow into a chart, and then the program is reading and interpreting that data. And from that, it gives us a signal. Now, it did give us the last signal it gave us was a long signal on November 5th, the day of the election. We actually did. And we got a warning that it was going to go like the day before. We usually get a warning. So it had a huge run up, but it has pulled back. But we're 2 days into this, and we're getting a warning from the VIX. So we don't have what we call a confirmed long or a confirmed short. It's yellow. And it's been yellow, a cautionary signal for the last 2 days. And normally when this happens, we've never seen it go beyond three. So tomorrow could be a very interesting day for us because and we've been doing this years, we've never seen it go beyond three. So we would expect that tomorrow we're going to get we think a significant move. Could be up, could be down. Um, and I know you're going to want to know. Um, what gives us some pause, well, when we're trading intraday, it won't matter because we're going to be trading what's directly in front of us. But this is what we also look at, and it could be down. It absolutely could be. We look at um, the VIX, and the VIX isn't showing us any concern. It's totally risk on. So we would like to see some caution in here, and we don't. We just don't see it here. It's a little bit weird that the Nicholas is picking up on it, but also we look at the skew, and the skew is on the S&P is it's trending down, but it's still high at 147. And what that means to us is that the big money, they are, in order to get the skew up there, the normal range is 120 to 130, and it's been hanging up here. But what they're doing is they're selling calls to the speculators and they're buying themselves puts. That's what drives the skew up. So um, we also track the yield curve, and the yield curve is just mildly um, re-inverted, but I wouldn't interpret too much from that. It's been inverted for almost 2 years, and usually it's about 15 months. It approaches re-inversion or re-invert or uninverting, and then the recession comes. It's not like on a 1 day event though, but this to us is an indication that we're getting ready still to go into recession. You know, I so but I think tomorrow we're going to have a I think we're going to have a pretty good move. I wish that we had a little more indication from the VIX of what of the direction here. I can come back to the Renko chart. We look here and we can say, well, if it does come up, we could still come up into here, and that would be still a pretty good move. Each one of these boxes would be $1,000, so that would be a pretty good move. Equally, though, this is also telling us if we can trade down tomorrow and we take this out, we could really accelerate to the downside still. So I'm inclined to think that it's going to be to the downside, but as an intraday trader, I don't have to bet on that. We can just play intraday. So that's one of the advantages. But I do think that tomorrow we're gonna break out of this either up, and if we do go up, that'd be good because I don't think it'll take out the high, and it could give us an opportunity then to get one of these C point down. And that's kind of we have to get that structure to get that C point down. So we shall see. We shall see how that plays out. Let me put this thing back. Um, Bear with me here. Where am I at here? Click here. That'll put that back in place. And we'll go back here. There we go. Now we will sometimes get phone calls and somebody will say to me, Don, I just want to know what's going to happen tomorrow. Well, I wish I could tell you day in and day out what's going to happen tomorrow, but the truth of the matter is we can't. We can't tell you no more than I can tell you on a 1 minute bar or a 5 minute bar or a 10 minute bar what that very next bar is going to be. We trade primarily for the trend and we trade primarily for the counter trends. The last big trade that we had was the short last week, and I can show you. We made videos of this. You can go back and watch some of those videos. What we had is what we don't have now. I can put this VIX on a daily view, and last week the VIX was here in panic, and the S&P on a daily was where? Was in euphoria. We sell. And we had every single market, the NASDAQ, the Dow, and the Russell, all in euphoria. And while the VIX was in panic, and we sold it. We traded Sunday night, we traded a little bit Monday, and then last Monday, and we got short S&P options, and we got short the Dow with futures. It had a very nice week. Now, though, we got the VIX at 40 and we got the market at 50, and they're right, it's right in the middle. It's right in the middle. And we could languish here, but this other situation with this the VIX that we've got this warning, we've never seen it go beyond 3 days. So I got the feeling that we're gonna, you know, break out of this congestion here in the middle. Here, we would rather play at the extremes, for position trades with options or putting on leverage, but we're dead in the middle. The VIX pushes this way, then the markets will in fact push down. If the VIX pushes this way, then the markets will bounce and they'll come right back up. Intraday, that isn't going to matter. We're going to just, we're going to trade our program and it won't matter to our members because they have their programs that they trade intraday and they trade you know, whatever's being presented at the time. By the way, Michael had asked us, I don't know if Michael's still here about being live tomorrow. We will go live, but you're on, even now, you're on a delay. If you want the best image, if you put your YouTube into 1080p, you'll get the best image, but you're still on delay because of YouTube, not because of us. If you join as a monthly member, we will give you a 1 day hall pass. Um, so if you join as a monthly, you get the nightly video, you get some education about some of our programs. You get an explanation, a video explanation on these different algos that you're seeing every night. And then you just let us know on what day you would want to patch in and watch. And then you do get to see it live because we'll give you a private Zoom link and we'll give you the cook's tour for about 45 minutes, and then you can spend the rest of the day, um, in a, it's instantaneous. The image is perfect, and you're seeing exactly what we're seeing. So just an FYI. We want to thank everybody for stopping by. As we approach midnight, the YouTube session will go away, but we will punch up tomorrow. So if you push the notification button, we'll try to go up. Um, you'll get notified. Now, some people, they're not even aware because maybe their brokerages don't let them. You know, we can actually get the machine, the brokerage trade station will enable you to have the trades being put in and taken out. A lot of brokerages won't let you do it. They just won't let you do it. And they're never going to let you do it. I would also keep an eye on the yen. I don't have it up on this screen, but I would keep an eye on the yen, and Japan is open for business. And any kind of strength in the yen could trigger a pullback in this market as well. You see, I'm just highlighting these are the 5 minute signals. The 1 minute signals probably paid out a little bit more, would have been little bit easier. But here are the 5 minute signals just from tonight. And this one came in the afternoon at 3:55. And then here's the oil as an example. And if you're trying to determine, well, do I trade the 1 minute? Do I trade the 5 minute? That's the sort of technique and discussions that we have during the Q school. We just want to say thank you for stopping by, and we're going to need to bring the YouTube session to a close. If you push the notification button when we punch up again next, which is probably going to be midday tomorrow, you'll get a notification. We wish you the best in the next few days. We are expecting a distinct move, and let us just show you what the option club selector is looking at. So you might want to take a peek at some of these stocks over here to the left, right there. You might see a bounce in some of these. And in Euphoria, there's really not that much, not that much. So so bounce might be a more likely outcome tomorrow, but we shall see. We want to wish you the best, and be sure to send us your questions. Thanks.